Lyft earnings after the bell. Let's do a little prep after some big investment from Bill Ackman in the space went to their main competitor, Uber. Tom White's looking at the options. Ivan Feinseth looking at the situation. Joining us from Tigris Financial Partners. Ivan, so Lyft seems to catch a little bit of a bid the past week with Uber on that Ackman investment. Does that make sense to you?
Well, if you look at what he's saying, what Bill's saying about his interest in Uber is the opportunity for robotaxis or self-driving vehicles. And if you go back a few weeks ago, Tesla's results were actually disappointing on the auto delivery side, but the stock continues to catch a bid based on the opportunities on the robotaxi side, which brings me to Mobileye, which is the only pure play in the ADAS, onboard ADAS systems, and this movement from ADAS to supervised autonomy to eventual full self-driving functionality. And right now, Mobileye is working with over 27 OEM auto manufacturers that puts their IQ system on a chip on board using their technology and eventually their chauffeur technology for full self-drive.
Okay. So they're all heading towards the same destination. Fair enough to say. How do we rank where they are along that path towards an automated fleet, Ivan? Including Waymo, I suppose we should put in there.
Yes, there's still a lot of moving parts, but Waymo is embedded in Google, and so the as I said, the pure play here is Mobileye. And I think that you're going to see across different metrics, companies converge on the eventual full self-driving technology. The other thing that Mobileye uses is visual radar, which is a really interesting technology, as well as their crowdsourced mapping technology, which they continue to gather mapping data from all of the cars that are on the road that are visually seeing what's going on.
What do you think the approach is from an investment perspective? Do you just buy all of them? Do you want a piece of the whole ecosystem? Or will we see competitive bias in the market favor Uber as it has in the past?
Well, I think Uber is a global company, so they have a much larger footprint and presence than Lyft. Lyft has a couple of interesting features, including this recently launched, you can lock in, if you're a commuter, you can lock in the standard pricing or from going from continual destinations as part of your commute. But, Uber also continues to expand their presence in not only food delivery, but last mile delivery for a lot of other different services. So that's been a part of their growth driver. But everything is going to move toward eventual robotaxi service, which involves using both Lyft or Uber's app as the platform to schedule or call a robotaxi to come and pick you up. So I think that's the play there. And then on the technology side, Mobileye is the pure play in enabling this, and then other companies that are playing this include Qualcomm and NVIDIA.
Ivan, if you look at the Uber chart, what do you think is possible? Got any numbers in mind? We're at $79 right now. High was about 87.
Well, we have a buy in a 12-month target price of 103 on Uber, 12-month target price at 26 on Lyft, so a little more upside there.
All right, so looking at both as potential entry points here. Thanks, Ivan. Appreciate it.
Thank you.
Thanks for the thoughts. Tom, how do you want to trade it? Let's start with Lyft.
Lyft options, pretty expensive right now on a potential move with the option markets pricing in, plus or minus about 15%, about $2.40 either way. In the share, it's a cheap stock, but it can move on earnings. So I looked at this a little bit differently. If you think this thing is going to go up, maybe look at a stock replacement type strategy where I can go out a couple months. It's not a pure earnings play. You got earnings, that's going to be a catalyst. But giving myself over 2 months in this, I went out to the April 17th monthly options, so about 65 days to expiration. Looked at just buying a higher delta in the money call on this one to take that bullish stance. And I looked at buying the 13 strike call. It's got about a 74 delta on it, so that reacts more like the stock, right? As that higher delta gets up there, it reacts more to the stock. So every dollar move in the shares, this is going to move 74 cents. Either higher or lower based on where the stock goes. But if on that 13 strike call, if I pay a debit of around $1. But I'd say $1.10 on that. I think it was where it's trading right now. 280, excuse me, 280 on that one. So the break even on this one to the upside is going to be 1580 over the next 65 days. That's only about 6% above the current share price, less than half of what the option market's priced in for a move on this one. So stock replacement might be the way to go. And if you don't want to buy the shares, giving yourself a couple months until expiration, looking for a catalyst to the upside on this one. But like I said, you don't need a monster move to the upside to get above that break even of 1580.
All right, buying the in-the-money call,
Yeah.
looking for some upside. The Alan Nuckman, we call
Yes.
that. All right, Uber, how's the approach differ here?
Well, it's already rallied pretty significantly. It's bounced nearly 30% so far this year, up about 17% just this month. Bill Ackman took a big stake, 30 million shares in the stock. That's what's given it its lift, its parabolic move to the upside over the last few sessions. You got to remember, just 2 weeks ago, this stock was in bear market territory, down 20% from those all-time highs that we saw just last October. So I looked at something a little bit more aggressive here based on what Ivan thinks. He's got a $103 price target. So I looked at a bullish combo, or bullish risk reversal, we sometimes call this, where I'm going to buy go out to the March monthly cycle. So about 5.5 weeks until expiration, where I'm going to buy the 80 strike call in March. And then to help finance that, I'm going to sell the 75 put. You're paying roughly a debit of about $1.10 on this combo trade. It's uber bullish, not to use that pun, but it's bullish to the upside because you're buying a bullish call. You're helping finance it with a neutral to bullish short put. If you pay that $1.10, it takes your break even up to 81.10 over the next 35 days or 38 days on that. That's only about 3% above the current share price. Now, where you start getting hurt on a trade like this, Oliver, is if it goes below 75. But you've got to be, if you do a strategy like this and stock does fall back below 75 into expiration in March over the next 38 days, then you're going to have to purchase the shares or close it before expiration on this one. So ultra bullish to the upside on this one in Uber if you think this thing is going to continue to move back towards those all-time highs. But you got to be comfortable owning the shares if it does fall back below $75 a share.
All right. Bullish on both. A little extra for Uber there.
Yeah.
Thanks, Tom. Thanks, Ivan Feinseth. As we get ready for earnings, Lyft should be a focus for self-driving cars.